Okay, before we get started, just as always, just please understand that any advice in today's session is of a general nature only and that your personal circumstances have not been taken into consideration. Okay, all right, so let us get started. Have a look at what's been happening this week and what's coming up. First of all, let's talk a little bit about the fundamentals. Many of you would have seen a couple of crazy things last week, like the Aussie dollar moving like 100, 150 pips, 100 in some cases against the euro, for example. The euro Aussie moved like 220 pips, like very, very quickly, and then changed direction straight away. Now, that movement was basically caused by China. Okay, China pretty much announced that they were devaluing the value of their currency, so the value of the yuan, and went ahead and proceeded to take action to do so. Now, as a consequence, the yuan dropped in value 1.9% in a single day, which is the biggest drop in the last 20 years for China. Okay, now the reasoning behind that and what caused them to take such action was basically China was starting to get concerned that the US dollar was gaining too much strength and it was hurting their exporting. Okay, so basically meaning for them that if they devalued their currency, it would be easier, more buyers would want to buy from China. Okay, so it will help their exporting of the country. Now, as a consequence of such a movement, to do that, basically they did it to improve their exporting. And as a result of that, it may have it's like the entire financial market is like a macro system. So there's many factors that affect it. As a consequence of that, we've been talking about the interest rate increases from the US side for pretty much the best part of the last 3 to 4 months. Okay, now everybody was largely preparing for a September interest rate increase. All of a sudden now, if China devalues their currency and their exporting improves, what does that basically do? It jeopardizes and hurts US exports. If it hurts US exports and then the US further increases their rates and strengthens their currency even more than what it already is, it makes them much less attractive as an exporting part of their portfolio as a nation. Okay, so essentially what this basically means right now is that at the moment where a September interest rate hike was, I don't know, 90% a done deal, that it was probably going to happen, we're now changed that number to we're sitting more like at 50-50 right now. And simply it's been done due to China interfering. Now, what this has also added an extra dynamic to the world of, say, currencies is that other countries, okay, such as your Australia, your Canada, your New Zealand's, which are, I guess they're not powerhouse economies, but they are quite influential currencies which stand their own. They have recently tried to devalue their currencies also by decreasing interest rates. So we've now China jumping in and doing the same thing, and it really does open the door for other emerging markets to be much more aggressive to protect their exporting business as well. So why do I tell you all this? Because everything is interrelated. You know, I got a lot of emails saying, Christian, why did the Aussie dollar move so much? There was no announcements, there's nothing. An announcement doesn't, well, there was an announcement, but it was indirectly. It was from China, which at the moment we're pretty much very reliant on the Chinese economy. Okay, so that's what caused that movement. That's what also caused the US dollar to drop in value. Okay, and pretty much the flavor of the month, all that US dollar strength has all of a sudden gone a little bit cold as we wait to see what the next steps are. Okay, so that's where all that came from. China does have a major impact globally. They are, I think, officially the second largest world economy in the world. So when they do things of this nature, it does affect quite a lot of other areas. Okay, on the other front, from Europe, we saw the euro rally. Okay, I think we had like 6 consecutive solid days, and we'll have a look at that when I pull up the charts. And that was largely on the back of the confidence. One, what China did hurt the US dollar, first of all, but also the Greek Parliament has basically they have passed through the bailout conditions, so they have accepted, and pretty much now we're up to the last little bit, and basically we can say that Greece is safe and business as usual. So the confidence in the euro has come back, and we saw that predominantly against the US dollar. Okay, so that's what happened that the week that just gone by. It was unannounced, largely, particularly like I have found that from my experience looking at these markets for the period that I have, countries like Japan's, the China's, they tend to, how can I put this? They tend to sort of dance to the rhythm of their own music. So they do things unexpected, and when they think it suits them, and when they're ready. Now there is this whole I guess feeling about central banks who are interfering in their currencies and how it affects other things, and that's another point for discussion. But pretty much every central bank acts in the interest that it suits them, which is basically their own currency, just like Australia does as well, just like the Swiss bank acted not long ago, which sent chaos through the forex market, and it will continue to happen. And that's one of the dynamics of this particular market. So if we understand things and we hear the right news at the correct time, we can basically take advantage of that. All right. From a data point of view, what we have on the agenda for ourselves this week is what you can see on my screen right now. And essentially, it's a week which is a little bit light on data, so there's not a whole bunch happening. But I guess some of the key ones to look out for, FOMC minutes is always, this one could be an indicator as to whether they give us a hint whether they will or they are intending to raise those interest rates in next month's meeting. Okay, so FOMC meetings is big. The BOJ always, they always got their own agenda, so they never surprise me. So with this one, it could be nothing. It makes the market do nothing, and then it's at times it can make the market move 200-300 points. Okay, pips, should I say? All right. From a raw data, I guess, really, to be honest, I think this particular week, the Aussie is going to be a little bit volatile. There is a bit of US data which affects the Aussie dollar directly based on data. We've got Aussie data as well tomorrow, but I think the China situation, because basically they said they did what they did, and then they also said we don't know if we have finished either, meaning this week they could just all of a sudden do it again, and then our Aussie dollar moves like crazy again. All right, so that's what we need to take out of this week. I think in terms of data, the Aussie USD is one that's going to be under the line of fire predominantly. So this is probably the one that's going to be affected most by raw number data. Okay. All right, so if you have any questions, please type them in. I'll address them for you. As always, let me bring up the charts and let us get started and see what happened, what didn't happen, and how we can position ourselves for this week. All right, so let's have a look. Start off with the Aussie dollar. Okay, Aussie dollar, look at that. It's just ranging, and remember that big movement that I talked about? There it is, a candle one direction, there it is straight after in the other direction. Now what that doesn't show is a daily chart, that those movements actually happen in a very short period of time. Okay, now my basically looking at this chart, I am not ready to be a buyer. Now I've marked out this region that I'm interested in wanting to leave this region before I get interested in a trade. For me to be a buyer, I want to see a break, a pullback with some kind of supportive, and then I will be a buyer. So what I'm trying to say is I will not buy the break. Okay, I want to see to break away, come back, and then I want to see this act as my new kind of support level, and then look for a nice candle price action candle to look for the support, and then I would be interested in buying. Okay, so to be honest, what I'm more interested in with the Aussie dollar still, I'm very keen to see what happens at around about the 75 level. That's a crooked line, but that's supposed to be a straight line. There you go, at the 75 level. So if we get to here somewhere and then I get a really nice candle pattern in this direction, that trade I will take. Okay, so that's what I'm basically interested in. If we break the other direction, then that really does open up the door as well. The only drama with that is right now is that this range is quite large. We're talking about nearly 300 pips range. So, and this trade here, I'm starting not to be as confident with it. So the one that I really would like to see, I'd like to see a break up there, and then I want to see the move exhaust itself or run out of steam, give me a nice inside candle, and then take that trade. That's the trade that I would prefer. Okay, now if this one happens, well, let's look at it and see if it makes sense to us. All right, someone's telling me that there's a bullish engulfing on a weekly chart. Let me have a quick look at that. If I change this to a weekly, um, okay, it's not your classic bullish engulfing. The wick is engulfing. Okay, so yes, this is engulfing. I would prefer this to be more like that, and I would prefer it to be green. Okay, so, but yes, I take your point. Other than that, I tend not to trade off a weekly chart. All right, so, but if some of you do, by all means, look at it. So, and especially for the purpose of what I do here on a Monday, it might take us like 3 months to find one trade. All right, so based off this chart right now, what I would like to see is right now where I am, I'm not going to do anything. I need to get out of this region, look for that pullback. And if I'm interested in buying when we break out and it pulls back, if you can see some kind of support, then it's the first time that I might be interested in that. My gut feeling is that that is not going to happen this week. Okay? All right, let me just draw a quick little line on my chart, just so that I remember. That's what I kind of hope may happen. Any questions on the Aussie dollar? I'll have a quick look on a 4-hour chart, see if there's anything else there. No, there's nothing there of interest to me, so we'll keep it as we were right there. Okay. All right. Let's move on to the Euro USD. All right, Euro USD. If you can have a look at this, first of all, that big movement that I talked about is here. You can see there's 1, 2, 3, 4, 5, 6 consecutive bullish days, and we got a break out of that pattern as well. Question, did anybody enter this trade? You would have entered there if you entered. Anybody? Is anybody in this trade or entered it? Rav's in the trade. Paul is. Anybody else? Bijani's as well. Okay. Romy. Okay. As well. Fantastic. Well, that's great. The trade is correct. Like the setup is correct. Now, if you are not in the trade, you've got an opportunity to get in now at a lesser at a better value. So you would be in at about maybe 65 pips at a better price. Okay. If you're super conservative, then what you may want to wait, and you may not get this setup. Okay, so you may miss out altogether on the trade. But if you could, now this candle's already gone lower than that one, so what the best you could hope for now is that maybe this candle looks something like that as a red candle, for example, and then tomorrow you might get a candle that looks like this, and then basically you take the trade in that direction, you get the fractal down here. That's in an ideal world. Now notice, look at my entry level. Even though I've drawn on my chart, my entry level is still going to be around about the same level as if you entered the trade right now. Okay, in my books, you've already got a reason to enter the trade, but I'm just saying, if you're super conservative, those are your options. What's the question being asked? I think we can adjust the top line. Let me see. We can always adjust the top line. So if I adjust it about there. So in any case, the entry is correct and a pullback makes sense. And to me, 110 is probably gonna, where are we now? We're at 110.90. So let me just mark where 110 is on my chart. Give me 1 second. Oh, we're at there. We're there right now. So we're at 110.95. Sorry, I'm just thinking to myself. Okay. So we're at that level right now. The level is good, guys. So if anybody likes this trade, it's technically it's a good trade. Okay. So if you were to enter this trade right now, probably the best way to play it, and for the people in the trade, can you just type in where your stop is? I just want to get an average of where we're all at. There's a few of you in this trade already. Can I just get where your type in where your stop is? Okay, I've got 108.44. I've got 109.44. Anybody else? Okay, so I can clearly see that one person has put their stop there, just underneath there. That's 108.44. 109.44 is probably here. This, anybody else? Oh, Romy, you're short. You're going in the other direction. Okay, all right. All right. So all right. So we've got two stops over there. Now, look, when you enter, if you were to enter right now here, okay, ideally this is the best place to put your stop. Ideally, okay. If you feel that this distance is too much, let me just measure it out. Now remember, it's just a dollar amount. It's 240 pips. So if you want to risk $30, you can do it. All right. But what I would suggest is, let's say if your stop was down here and you entered right there, where we are right now, if this was to come back and pull away and then go, as soon as it does that and we pull away and we get a fractal, just bump that one up to that level there. All right. Now, if this trade plays out the way that this type of trade can play out, this is the level that you can expect. You can expect about up here. So we're talking about like 115. So it's a big trade. All right. So there is enough in that trade. So if anybody likes it, position yourself. But if you go in this trade and you put your stop just here, You're just asking for trouble. You're just placing the trade, but you're not trading the actual triangle correctly, is what I'm trying to say. Is everybody clear on that? If you feel that the stop is too far, then just do not participate. You're better off. Okay, can I just get confirmation that everybody understood what I've just explained? Yeah, so I've given you an option. So if you do want to take place, the best place is here. Okay, if you can't afford that much, you may want to go here, and I'm picking this number because it's halfway between in the center of this triangle. All right, but as soon as this pulls back and does that, on the assumption that it does do that, then you got an opportunity to move your stop up. Okay, to wherever that last pullback was. Okay. All right, so that's the Euro USD. So I guess effectively we're long right now from where we are. So let me just place it. Just want to see what account I'm in. Yep. Okay, so here I go. And I'm just going to take a 0.02 trade so that I can take half a trade off. Let me just place a stop. Give me 1 second. Okay, and let me just make my adjustment. There we go. And to start off with, I'll just place my stop at around about there. My target, sorry. Okay, so there we go, and mark the chart so that I remember. All right, let's move on. GBP USD. Okay, GBP USD. Look at this level. It's holding. It's holding. It just doesn't want to give in. We're there again right now. Now, you gotta think that it's gonna break. That's what I'm looking for. I'm looking for this trade. I'm really looking for it. It has not shown itself right now, so I'm gonna wait for it a little bit longer. And what are we looking for? Now, with this one, remember, we're inside this channel. Okay, so we're inside this channel. So what we would like to see is maybe I'd like to see it somewhere like that. And then right there, I'm happy to go ahead and participate. Okay, now I'm on a daily chart here, guys, and there's plenty of room to reach the other side. Now, the other option is, because we're inside the channel, what you may want to do is if we break it, let's say we break it like this, and then you don't want to join right there. Okay, let's just say that you do not enter right there. Then what you're going to have to wait for is a little bit of maybe a pullback and try and get a price action. See, our moving averages, we're on the correct side. So then we're looking for a typical inside candle to break upwards. Okay, now that may not happen though. All right, now a point of note is if we do get this candle that breaks like that, you may also get a T-chaser set up as well, because we're very, very close here, and I'm pretty sure that the moving averages are starting to line up. So if you get the candle that looks like that, you're probably going to get a T-chaser set up as well, which doubles up the reason. The first reason is it's a clear psychological barrier being broken inside a channel and possibly with a T-chaser as well. Alright, so you could have 3 good reasons to enter this trade. Keep an eye on it. It could be ready tomorrow morning. If this candle tonight, during the London session, if we have a rally and we end up like that tomorrow morning, that's it. You're in the trade. Okay, everybody clear on that? GBP USD. I am not interested at all in selling this one. Also, the GBP, one positive thing about the GBP is that it's actually held its own against the US dollar, whereas most other currencies have not. So if we do get that little bit of US weakness, the GBP will rally and will really, really give us what we're looking for. All right, so this one's on the cards. We just got to wait for this candle to play itself out. All right. Okay, let's move on to gold. Okay, gold. Oh, what a bummer. Our pattern didn't play out. It broke the other way. Now, Is that a valid trade or not a valid trade? I'll put the question to everybody in the room right now. Is that a valid trade or is that not a valid trade? Okay, I've got one no. Anybody else? Got Rav saying valid. Anybody else? Got two yeses. Phil says maybe a short trade. Okay, all right. I'm actually a little bit surprised. There is only one way you trade a flag, guys. One way. That is not a valid trade. Okay, not a valid trade. So that is not a trade. We were trading a flag pattern. Let me draw it the correct way. All right, so the way that the pattern, now this is an upside down one, remember? I'll draw, let's just say the market's doing this, and then it goes bang, and then it starts to congest again, like this, creating the flag. I'll just change colors, so then you can say, see, there's our flag in there, and then when it's had enough, it just goes bang, and it moves into this direction, and this distance is equal to this distance. That's how you trade a flag pattern. Okay, this is the flagpole, there is the flag, and we're supposed to go in this direction. That's why I've got that line there. I thought we were clear on that. If it goes the other way, we're just not interested in the trade. We just walk away from it, and it's all void, and we do nothing. Now, can it go back? Absolutely can go back, but then that's just not a recognized pattern, and we're not interested in this trade at all. Is everybody clear? Okay, I just got an interesting comment. Someone said, I think that short is better. Let me ask the question. First of all, Bijan, do you mean a flag, an upside down flag is better than a normal flag? Is that what you mean? Or are you talking about going short right now on this? Okay, not a problem. All right, but since I brought that up anyway, with currencies, okay, now this is gold, so this is a little bit different, but with currencies, do you think that the market goes down, that a currency goes down quicker than it goes up? What do we think? I just want to ask this question out. With currencies, does it go down quicker than it goes up? Okay, I'm getting very interesting answers here. Wow. Okay, this is the summary from everybody's answers. I think 90% of you, that's 90% of you are saying yes. And the answer is no, it's not. It's not shares. Shares can go quicker down than up. Currencies, it doesn't matter, okay? Because it's simply a comparison of one currency against another, okay? So, and for it to go down, it doesn't mean anything. Like for example, if we pick a pair, say the Euro USD as an example, if the Euro USD went down quickly, what does that mean? What can cause the Euro USD to go down quickly? Yes, one person, Paul says the euro can fall. Yes, and Ray said a strong USD. Fantastic. So, there's two things that can cause it. Okay. Now, what about if sometimes both currencies can get stronger and it still goes down? All right. It just means that one of them is getting stronger quicker than the other one. All right. So sometimes you can get one getting stronger and at the same time the other one getting weaker, and that accelerates the movement. but it can be the opposite way as well, which can also, it's the equal movement, but just in the other direction. All right, does everybody understand that? Yeah? So I know that if you have a background in trading stocks, we tend to like shorting better than going long. Okay? You shouldn't have that bias in FX. It can move just as quickly long as it can short. All right? And just to prove that, let me jump over. Let's have a look at the Euro AUD. Okay, look at this. This is a daily short candle, and then like 1, 2, 3, 4 days later, that is a daily bull candle. Look at the length of them. Look at the length of this candle here. These are like 200 pip candles, guys. Let me just measure it. This candle here is a 346 pips. This one here is 300. Okay, so it can go either way. All right, so don't be hung up on one favoring more than the other. All right, let's move on. Let's have a look at the US yen. US yen. Okay, the US yen is one now. Now, this trend line, we're still in an upward trend. Okay, we had a big dip down, but we've recovered and we're fighting our way through. At the moment, this big candle was caused by China. Okay, so, but at the moment we're narrowing in. I'm looking for entries, so I still like to buy. All right, so in an ideal world, if I don't have a position in this right now, what I would like is maybe just to break down a little bit and give me a nice entry right there and then go for it. Okay, I do get the feeling that once all the dust settles and the US gets down to business, we clear this, we clear that, and we're heading to 130. All right, but we need that interest rate decision to go our way. When that happens, it basically opens up all the doors and we're ready to go. In the meantime, right now, we don't have a trade. There is nothing there. We're right in the middle. So what I'm looking for is I'm looking for a pullback and a nice entry, because this one here, I don't like one thing is, I'll talk about this in another lesson, but see that this candle's got the double fractal. Okay, I don't like using that candle as the one with the fractal for inside candles when I'm looking for it. In either case, we broke here downwards, which cancels it out. So it means I don't have to make a decision, which is kind of good. So what I'm looking for is I need another setup before I can look for it again. Right now, US yen, I don't have nothing. Give me one moment. Someone is saying there is a fishing strip on this particular chart. Let me verify. Okay, yes, there is. Right there. It's a very, there's not a lot of room towards that. Okay. But for anybody that trades the fishing strip, you got the setup right there. Thank you, Bijan, for that. So if anybody's interested, it's there. But based on what I'm seeing from this chart here, I am not taking any action right now. Okay, I've got these little candles getting inside of each other, so this could easily break to the top side and continue, or break down. What I would prefer is for it to break down, give me the setup that I'm looking for, and then I'll take that long. Okay, Paul saying he's in on a T-chaser. Yes, where was the T-chaser entry? Was here. I think it's this candle here. That candle there. So Paul, your original stop is there. Your new stop is over here. So you've taken a lot of risk off the table. And I guess from your point of view, we hope that it just turns around and continues to run for us. Okay. So if anybody's in on a T-chaser, that was your entry over there. Your stop has now moved and you're hoping that it continues to run. Okay. All right, so other than that, I don't have a trade right now on the US yen. I just got to wait it out. Let's go to the euro yen. Okay, the euro yen's looking really nice. It looks, first of all, did anybody take a trade off that break? I just want to see if anybody did. Okay, Bijan did. Anybody else? I've got a few no's. Okay. All right. So that was the straight break trade. If you didn't take that, okay, and this one was a little bit tough, okay. It's not your best of breaks. I mean, the break is good, but what I don't like is that I still got this area over there. But in any case, it does look good now. It looks like it's finally, if this one pulls back in here, I may get another setup near this top line to shoot it up. I do think I'm going to get that set up on the euro yen, and that chart is looking very, very nice. I do like it a lot. I just need to see what this candle finishes like, and then hopefully I get the fractal underneath it. I get an inside candle next to it, and then away we go. All right, so look out for that one. The euro yen is shaped up and set, ready for a trigger. Let me have a quick look on a 4-hour chart. One moment. Okay, there's nothing extra that I can see on that. The only thing that I may want to add to this is if I just draw this line here just to keep me honest and just monitor this trend, you may get, I think that the pullback will happen here on this line here somewhere. Somewhere there I think is where we're going to get an opportunity to take it. But I'll just keep this line here. All right, so sometimes if, for example, you get, and let's say we do get an entry there, and you just enter based on the pullback to the level, so you don't actually get an inside candle, you just come out and you enter, then you may want to use this white line as your stop. So you may want to have your stop there somewhere, for example, instead of down there. Okay, so using keeping the line on your chart can basically assist you with your stop management if you decide to enter on any kind of a pullback, which would be around about the 137.35 level. All right, but what I'd like to see is I want to see it to come back, and I want to see a nice either engulfing or a inside candle set up with a fractal, and then I'm happy to take that trade. All right, so I'll wait for that one. Let's carry on. Let's have a look at the Kiwi dollar. All right, Kiwi dollar is ranging from down there. We spotted this. We started to predict it. Now, see, when you get the hang of trading and you've been doing it for a while, you can kind of feel when the market's going to range. I think I drew this box 2 weeks ago. The advantage, I think we drew it around about here. The advantage of getting the feel for the range is that it enables you to drop down a couple of time divisions and then trade inside. Okay, so if you're a range trader, then this is where you take advantage of that. Now, we didn't do none of that. That's okay. We're still in here. I have no interest in buying the Kiwi dollar, to be honest. I think it's just a matter of time before we break through 65. 65 is holding firm and strong. But what if we get the clean break? So we got these wicks, but they're not it the basically they're not setups. We need the candle to close underneath. So that one was no trade, and we still haven't had one. So I'm still looking for it. Okay, I'm still looking for it. We may go up and test this top again. All right, so if anybody wants to try a range trade, you may want to try one in this direction. All right, but what I'm looking for is I'm still looking for a breakdown. All right, so at the moment I'm not interested at all in buying Kiwi dollar. I would be just looking at selling, and I'm looking for the right setup to come my way. Okay, hang on. Is that a setup already? Give me 1 sec. Is this a setup here? Oh, this candle's got the double fractal though. Is that a setup, guys? I just saw that right now. It's right in the middle of the mix, but what do we think? Is anybody in on that? Okay, the setup is correct. Yeah, the only thing that throws me off, and some of you are saying the same thing, is a double fractal. I would prefer if this fractal wasn't there. Okay, what the double fractal means, it's a candle that's got a high and a low, which means that the market swung in one direction and then swung the other direction so badly that it created highs and lows all within the one candle. All right, so that's what the double fractal candle means, and I generally don't like to use it as a setup candle. Okay, so I'll just leave it alone, and I'd like to see the fractal set up either here, or if it breaks up, I'd like to see it there so I can shoot it down. All right, so there we're just in the sideways pattern. We're just consolidating, just as we said. So we're waiting for the breakaway. All right, let's move on to our final one for the day, Euro Aussie. Now the Euro Aussie is perhaps the most volatile one of last week. It swung viciously when the the Chinese bank intervened. It moved like crazy. If anybody was watching, you would have seen it move quite a lot, okay, and very, very fast. We're talking about like 50, 60 pip movements in like 5 minutes. So the funny thing is that it respected here. We didn't get a setup, so unfortunately we didn't get a trade. We didn't get the best setup over there, even though we were tracking the channel. We missed out on two opportunities over there, and now I'm kind of in the middle of that channel again. So to be honest, right now, the Euro Aussie is one that I'm just staying away from a little bit. It's just moving a little bit too much for my liking, and because of the China situation, I would prefer to trade that move with something else like the Aussie dollar instead of the Euro Aussie. In any case, let me have a quick look. I still can't see a trade for us. We're in that nice channel. I guess what we could look for would be what I thought we were looking for last week, which didn't happen. We got to look for the trade at the fringe, okay? And this time, don't be surprised if it's that trade. Finally, that we will walk away from it. Now, if it comes and it shows you this trade, then by all means, well, then it's showing it to you. We can take that one as well. All right. For me, I'm not trading the Euro Aussie this week. All right. So, and my reasons are as I've basically just explained. Okay. But from a technical point of view, these two trades that I'm showing at that level are key, and they're valid trades. So if we get a breakout away from, it's a very nice looking channel. Okay, so if we finally get a break out of it, well then it's going to be a nice movement, or we might bounce again and we get a nice movement out of it in any case. Okay, any questions on anything that I've covered today, guys? Let me go back and have a quick review while I give you an opportunity to type your question. All right, Aussie dollar, we are in a range. What I would like to see is a break up and then somewhere around about the 75, 75.50 region, a nice inside candle or an engulfing candle reversing back down so that I can take advantage of it. Okay, Euro USD, I've put a position on just right now during the class. You can see my line, that's where we've entered, and the reason for that trade is we got a break out of that triangle. I'm getting it at a cheaper price, and I'm happy to ride that through. Okay, now remember with this one key is if this does move away in our direction, don't forget to grab that stop and put it behind the next area where you get a fractal. All right, GBP USD. Oh, look, guys, it's happening. This session might give us the break that we're looking for. We're flirting with that line there. Now remember, if you're going to trade it off a daily candle, this trade is not ready until 7 a.m. tomorrow. So even if you see it go crazy like this, now, yes, you might want to jump in on the trade there, but you run the risk that you end up with something like this big wick, and then let's just say the candle ends up all the way down here, and then you're wondering, why did I enter that trade? Okay, so I'm just showing it to you, but it's flirting with it right now. We are right at that level. You can see that's the current price right now. Next one, gold. Gold, we're doing nothing. We've got to wait and look for something else. There's nothing showing, so I'm leaving gold alone. US yen, likewise, we're in no man's land. I still want to buy, but I'm looking for an entry to buy. Euro yen, we've got a really nice setup coming up. I think within the next 3-4 candles, we'll have what we're looking for, and we'll be buyers in the euro yen market. Kiwi dollar, we're waiting for a break. Either we're going to pull back up to that 67-ish level or maybe higher and then look for a sell, or we break lower and we're selling straight away. Euro Aussie, not trading this week, but for those that want to, on the fringes, look for the breakout of the channel or the bounce. Okay, any questions? Anybody want me to have a look at anything other than what I've just covered? I've got a few minutes. Let me know. Okay, looks like we're all good. Okay, all good. What we'll do this Thursday, we'll continue as per normal. This Thursday, what we'll do is we're going to cover pattern trading. So for all of you that aren't quite sure and the different patterns that I like to trade, how to take advantage of some tools and to maximize the most out of it. So Thursday, 3:30, as always, we'll cover pattern trading. Any questions, as always, email them through, send me your screenshots, and I'll be more than happy to help you. Other than that, have a great week. I'll speak to you all on Thursday. Bye for now.